This is Dr. Duru from Ahan Analytics with the market breadth. This holiday shortened week, it looks like the sellers took time off and the buyers stepped right in for those Black Friday specials. They had a great Thanksgiving. The cracks that opened wide up in the stock market look like they have healed. Hope is back for a year-end rally, and a melt-up is unfolding and looks like we're ready to hit all-time highs like nothing ever happened. This has been a repeated pattern all year long. I was hoping that we would actually get to real oversold levels so I could get aggressively bullish, but it didn't happen. So what I have for you instead is a set of charts. We're going to group them first since it's Thanksgiving and Black Friday and now holiday shopping time. Let's start with the consumer facing stocks. Going to go right into tech. Always got to talk about tech and the AI trades. I have software stocks. And then I'm going to wrap it up with silver. This is going to be a very interesting chart because this is saying everything I need to know about what's coming for interest rates with the Federal Reserve meeting next month. And then conclude with healthcare. All right, let's take a look and dive right in. And I promise this one will go much shorter than last time. But if you still want to see just some individual stock reviews, go right down to the captions where I have a timeline. And you can just click on it and go straight there. All right, let's take a look. Start with an overall view of the stock market. This is pretty much all you need to know about what happened or where we are, what the status is. This is Swing Trade Bot, my favorite stock scanning tool. All of the trends, are up for all the major indices, short-term, mid-term, long-term, up, 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 up. Wilshire 5000s, S&P 500, NASDAQ 100, Russell 2000, and the Dow, they are all pointing up. The cracks have healed in the stock market. Now let's take a look at my favorite technical indicator, the percentage stocks trading above their 50-day moving average, what I like to call AT54 above the 50. You can see here we ended last week right at a point that AT50 last saw in April, late April. I thought we could continue to trend down here to oversold levels, which is 20%. It did not happen, and instead, buyers turned right around. And that started on Friday and continued for the week. You can see buyers had, or I should say, market breadth expanded throughout the entire week. We even bursted through, not we, but market breadth even bursted through this downtrend with the dash line and this downtrend with the red line. And now the only downtrend that's left is this primary one. I drew it right here. It's going diagonally. It looks like with this current momentum, market breadth could hit there. And this would mean that we would suddenly go from threatening oversold conditions to suddenly hitting overbought. And I think it's going to take hitting the overbought threshold to get these indices to finish the year strong. So that's what I'm keeping an eye out for. I'm still keeping my short-term trading called neutral. And let's see what conditions will unfold to get me back to bullish. All right, let's look at the S&P 500. Before I do that, let's flip this over to logarithmic. And what you can see here is what I was talking about. Here's the index. It barely even paused at 50-day moving average resistance, which is that red line. I'm just zooming in here so you can see it. On Monday, we had a 1.6% gain, stopped a little bit short of 50-day moving average. There was a little trickery with sellers taking the index down and then pop right up right there. If you're a short-term trader, day trader, you just have to be bullish at this point. Like I said, I'm staying neutral for now. I want to see what the index does as it challenges its all-time high. And of course, I'm wary about what the Fed might do in the December rate meeting on December, I think it's 10th. NASDAQ, similar picture. You can see that here. NASDAQ cleaved right through. Let me zoom in so you can see that better. It's cleaved right through the 50-day moving average resistance, popped above its 20-day moving average resistance, which is that dash line. It's not quite as close to its all-time high because, of course, the AI trade has taken a lot of hits, took a lot of hits in November. And so we'll see who wins the race to get back to the all-time highs first. And then the most incredible thing that developed is IWM, the ETF of small caps, otherwise known as iShares Russell 2000 ETF. Since the turnaround on last Friday, a week ago, it has launch straight up. I completely underestimated the ability for IWM to rally, even though everyone has now gotten on board with the Fed going ahead and cutting rates next month. I didn't think that the stocks would turn on a dime, like basically a 180-degree. So I underplayed my latest IWM call options and did not profit from this rebound nearly as much as I should have. And you can see IWM is so strong, it might even win the race to get back to an all-time high. The all-time high was right here. You see where I'm waving my cursor around. You can see the dashed line. We're only 2 points, less than 2 points away from that all-time high. Fascinating stuff. And now the VIX, another interesting development. Remember, you might recall how I drew this bowl-like shape to show, actually, let me get this into a better look for you. You can see this bowl-like shape was showing how the pressure was pushing up on the VIX. Well, starting this week, early this week, that pressure has completely broken down. In fact, I might as well just remove this bowl because that bowl is no longer the defining technical dynamic for the volatility index, the VIX. So the VIX could not be more bullish than it is right now. It's basically saying no fear, buyers have a clear takeoff ahead. Of course, anything can happen, but that's what things look like right now. All right, let's dive into the consumer-facing stocks. Probably the premier stock of the week, KSS, ticker symbol KSS for Kohl's Corporation. It soared 42% post-earnings. Didn't take this one seriously. I had traded into this stock. It was part of the latest meme craze earlier this year, but clearly Kohl's is in a true recovery mode. Let's peel the onion back, or sorry, peel the trend, the time frame back. You can see that Kohl's is now at a, let's see, how far away is that? That is wow, that's more than a year, 52-week high. That's almost a year and a half. So you can see this nice V-shaped recovery in KSS. And I mean, if this is communicating to us to what retail is all about now, the consumer essentially looks fine, or at least the consumer is recovering, despite all the lamenting headlines we see about bad consumer sentiment. Dick's Sporting Goods, it is clinging to 200-day moving average support. It had earnings, it dipped down, and buyers stepped right in. I think buyers are sensing that consumer-facing stocks are a place to go as a rotation trade out of tech or out of the AI trade, the crowded AI trade. You can see Dick's hasn't gone anywhere. I just peeled the time frame back again. Really hasn't gone anywhere since early 2024. So there's really no trade here, but it's just, I'm pointing this out to show that how Dick's held on to this important support in the wake of earnings. Best Buy is another one. Best Buy had earnings last week, or earlier this week. It gained 1.1% from earnings, and it's holding the line. It hasn't gone anywhere for a while. You can see that here. Just like some of these retail stocks, it hasn't gone anywhere since, what is this? Let's just call it early 2022. If you want to go even further back, it really hasn't gone anywhere since 2018. So again, no real trade here. So the real news is just that, hey, Best Buy is hanging in there. It doesn't look like consumers are bailing out on expensive goods like electronics. Now here's a recovery play. Six Flags Entertainment Corporation, ticker symbol FUN. I bought in earlier this week. I've been watching this one because Jana Partners and Travis Kelce, tight end for the Kansas City Chiefs, bought a huge stake, 9%, and it took the stock way up 17.7%. But I've been burned on chasing news like this. These are not insiders. These are just investors. So you can't always assume the investors know what they're doing or have great timing. And that's exactly what happened here. The market was excited for a while, and then FUN, ticker symbol FUN, FUN just dropped straight down like a rock. If I peel the timeline back, you can see it's now below even its all-time, the pandemic lows. In fact, let's see if I can go to weekly. Give me just a quick second here. Yeah, so it's not all-time lows. It at one point slipped right by the pandemic lows and hadn't traded this low since, wow, that's incredible, 2010. So this looks like a company in trouble. I normally wouldn't even touch this rebound except, and I forgot to put the label here, we had insiders finally buy some stock down here, and now we have the institutional support. So this is looking pretty decent. I like this one. Now, Roblox is another one I have my eye on. I had put a circle around here because of this pending test that I saw of the 200-day moving average support, which is that blue line. And unfortunately, that support did not hold up, and Roblox cleaved right through that. So it's technically in bearish territory, but I am keeping an eye on this, see if it can break back out of the 200-day moving average and then punch through its downtrending resistance from the 20-day moving average, dash line, and the 50-day moving average, the red line. All right, now if consumers are going to recover, I want to get into a stock like Lyft, ticker symbol LYFT. It had good news at the earlier this month, and buyers just bought it up after earnings. And for whatever reason, and maybe it was just the the fears of the Fed not cutting rates just weighed down on it. Eventually, sellers stepped in and reversed all of those post earnings gains. But you could see sellers couldn't push it any further. Let me zoom in so you can see this clearly. Couldn't push it any further. So now Lyft looks bullish. Looks like it's ready for a rebound. This is at the top of my shopping list for next week. One more consumer-facing stock, Corsair Gaming. This is a stock I followed for a while. I haven't traded in a long time. I thought this stock was pretty much done after earlier this month. It dropped 13.2%. If I peel the time frame back, you can see how badly it's done ever since the initial excitement post-IPO. It's just been in this long-term, multi-year, 5-year downtrend. But what caught my interest this week is that the CEO stepped in and bought $305,000 worth of shares. That intrigues me. And I went ahead and bought some shares today, and we'll see what happens. You know, the worst thing, well, I shouldn't say the worst thing that can happen, but I'll obviously stop out if this stock makes a new all-time low. But I want to hang in there and see if the CEO, has some is basically communicating some good news ahead finally for the company. All right, that's enough for the retail specific stocks. Let's go into, like I said, you always have to talk about tech. Semiconductors are the leading story in tech right now because of the AI trade. Last week I talked about Micron Technology plunging, and I bought into this support at support at the 50-day moving averages. I like the way that the stock held on to that the previous week, and sure enough, it soared 8% on Monday, and the buyers have stepped in little tentatively on Tuesday, but have stepped in every day of the week, and now all of those losses are recovered, and I'm looking to see. I'm expecting Micron Technology, ticker symbol MU, to eventually test all-time highs and perhaps resume the earlier uptrend that was so prominent in this stock. I have a call spread going. I think it's a 230, 250 call spread expiring in December. Or no, sorry, January, because I wanted to give the recovery some time, but it looks like the recovery is going to unfold much faster than I expected. Intel, I took my eye off the ball on this one. I was watching it for a while as it plunged below the 50-day moving average. But what I did not notice, Intel is ticker symbol INTC, I did not notice that buyers slowly were crawling along the 50-day moving average. Someone must have known something was up. Today, I didn't label it, sorry about that, but today the stock soared 10.2% on news of the partnership that it signed with Apple is starting to take shape. If you notice my labels here, Intel had gained, what was this, essentially 9% in late September on rumors, I think, of a partnership with Apple. I was very skeptical because Apple dumped Intel overboard, I think it was a few years ago. So it really didn't seem possible that Apple's going to step right back in. But sure enough, it looks like Apple wants the foundry business, wants to give some foundry business to Intel. So now Intel's looking pretty good. Was right back into bullish shape, trading above its 50-day moving average. Applied Materials. Let's just wrap up the semi look with this. You can see Applied Materials had a big week this week by getting to testing and challenging its all-time high. And this is important because after earnings, the stock plunged below its 50-day moving average and recovered right away. So this was telling you that Applied Materials, ticker symbol AMAT, is turning things around and becoming bullish again. I didn't buy in because I have other plays. I have enough semiconductor plays and all that. But this is very encouraging for the semiconductor trade that buyers stepped right in. They redefended the 50-day moving average. I think this is all systems go for Applied Materials. All right, let's go to software now. Zoom. Zoom is fascinating. It just cannot quite break out. I watched this thing like a hawk. I thought I had missed the boat. Zoom gained 10%. I think it was up as much as 20% post earnings. It faded hard. When I did my daily stock review, I was surprised to see how far it faded. Zoom, ticker symbol ZM, got as high as $91, and it faded all the way back to that 10% gain. And then sellers stepped in again, took it down 2.2%. I went ahead and stepped in and bought. And this time I'm buying and I'm just going to hold. I don't know what's going on. Zoom, its valuation is low. The company is cash rich. The market is just very reluctant. I think probably too many people got burned. Again, I'm peeling the timeline back. It traded almost to $600 5 years ago. Almost 5.5 years ago. So I think a lot of people were just burned by the subsequent collapse in Zoom. And that's what's probably holding it back. That's just a guess. One of these days, Zoom is going to break out of this consolidation period, and I want to be there. And I'm going to stop looking at this one so closely. I just bought some shares. I'm going to sit on it and just see what happens. And maybe I trade around it, around some of this volatility where the skeptics step in, sell the stock down, and the buyers step in and then sell it back up to the top of the trading range. All right, so another software stock that I've had my eye on for a while after I had a great trade on it several years ago is Nutanix. This one's fascinating because it collapsed 17.8%. An analyst, I think, stepped in, tried to save the stock, was unsuccessful. But the company basically just said that it had to shift some revenue out, and investors and analysts hate to hear that. The company said the revenue is going to come, they just had to shift it out. But what investors and analysts see is a slowing business. I've seen this time and time and time again. I'm not saying there's a guaranteed recovery coming, but I like making these plays because if the company is being forthright and they are communicating exactly what's going on in the business, just pushing out revenue does not change the fundamentals of the company. You could see going into earnings, someone sniffed out some bad news. So hopefully sellers are about to finish doing their damage. Nutanix sold down to levels at last seen last summer, 2024. For starters, I just sold a put option, I think a 45 put option expiring in December. That's my starting point. And then I'll go from there. I'll build a position depending upon other conditions in the stock and in the stock market. Zscaler, this one really surprised me. I didn't look too closely at earnings. I did try a pre-earnings play with what's called I went short an iron condor. I won't go into the technicals of that, but I sold a put spread and I sold a call spread ahead of it because I just thought that at worst, Zscaler would probably just tumble down to 200-day moving average and hang out there. It did not. It cleaved right through that. It lost 13.3%. Sorry, it lost 13% on the day, and sellers even nudged the stock a little lower. I'm going to keep an eye on this. If it trades back, if it closes again above the 200-day moving average, I want to buy. And this is why. I mean, if I peel back here, you could see Zscaler has had a nice recovery. It's a little ominous that it stopped now twice before challenging the all-time high. So that's a little concerning, which tells me that there could be a lot more selling pressure to come, and maybe my buy point won't come anytime soon. Buy point meaning a close above the 200-day moving average. CRM, this is Salesforce, continues to be suspiciously weak. It's trading, yes, around lows of the year. Around lows of the year. It hasn't been this low since summer of 2024. Its buyers cannot put much momentum in this stock at all, and folks are just very skeptical of this one. This is going to be one to watch in 2026. If CRM continues to be weak, that means that this stock, Salesforce, ticker symbol CRM, is just about dead money. And this could actually cascade out into other big enterprise software plays. As you may recall, there's been this lingering fear that AI is going to wipe out all the software companies. I'm very skeptical of such a thing happening because there's so many things that AI needs to be able to do to make that even close to reality. But the weakness in CRM could be one of those early signs that investors really take that prospect seriously. Last software company, and this is actually also, you could consider this to be consumer facing, Shopify, ticker symbol SHOP. This has been a really tricky one to play. I tried to play the 50-day moving average support. Let me just zoom in so you can see it clearly. After earnings, I thought the stock would pause and hold that. It did not. It eventually collapsed down and confirmed the 50-day moving average breakdown, but then buyers suddenly came back in and the sellers, I guess, got exhausted themselves. And so Shopify ends the month of November closing above its 50-day moving average. It's bullish again. I jumped right in. I didn't wait and just put in yet another call spread. I think I did a 165 to 175 call spread expiring in December, because if I'm right, Shopify should just keep going higher. I didn't want to buy a longer term one, because if I'm wrong, that longer term one is going to go to zero anyway, and I don't want to pay that price. All right, let's conclude this, like I said, with healthcare. HTEC, this is one of my favorite now ETFs. It's the Robo Global Healthcare Technology and Innovation ETF. I'll zoom out so you can see why I love this one so much. There's the classic bull signaling a bottom in this one. It's been years, many years in the making. I've been accumulating this ETF for a while. I haven't talked about it, but now that it's done this fantastic breakout to, see, what did I label this as? Yeah, 3.5-year high. I think it's now confirmed this bottom. It's now in bullish territory, and it looks like my patience may be paying off. I think healthcare is going to be the place to be, particularly if money continues to come out of pure AI plays and software plays. Healthcare is going to be a big one in 2026. Again, I hate making forecasts, but this is just the way I'm leaning, just given this sector has been so beaten up and so neglected for so long. So this is a nice breakout. You can see the volume has been great. All right, I promised I was going to keep this quick. Let me just end on showing the S&P 500 as the backdrop. Again, what's coming up, the Fed meeting is the big catalyst next month, December 10th. Let's keep an eye out on that. I wanted to end up on silver. Silver is telling me what I expected is that the Fed is just going to go ahead and cut rates. I think they're just going to try to jawbone their way into convincing people that inflation is not a problem. They're going to put in an insurance rate cut just to make sure the labor market doesn't fall out of bed. Yes, consumers are spending like there's no tomorrow still. Consumers, by their spending habits, don't seem to be worried about the job market, even though consumer sentiment indices are saying they're very worried. Follow the money, follow the action, ignore the words. Actions count. And the action here is silver has broken out to yet a fresh all-time high. It is anticipating Fed rate cuts. I'm aligned with silver on this. Gold is not quite at the all-time high, but I think it will get there. So ticker symbol SLV is the one to watch going into December and going into the Fed earnings. All right. So there was a lot that happened this week, even though it's holiday shortened. This is just a small sliver of it. You can check out my blog at drdewar.com/122 for more details. I post a lot of my commentary there. You can always subscribe to this channel. Put any questions or comments down below in the captions. Again, I put a timeline down there so you can refer to stocks easier in the future. And of course, share this content, give me a like so that the algorithm knows what's up, and I can get more subscribers here. All right, thanks for checking this out. And until the next time, take care and trade and invest safely.